Good morning, BigSquareRoadRunner.com. What's your morning horn of Z's? Your sip of coffee. Sorry, tea. Day 3 of the cleanse. Hope you guys are doing well. Yeah, this is an easy one so far. Easy. 9 days. Big freaking deal. I do want to make a clarification. Yesterday, when I was talking in the park about the Litecoin Road to Ruta party in Las Vegas, I said the 29th. It is the 27th, Sunday the 27th. The day before the Litecoin Summit, which is on the 28th and 29th. Just to be clear, and I'll be sending out information on that this week to all the people who signed up. If you want to go, it costs 1 Litecoin. It's in Vegas at the Cosmopolitan, starting at 1, going till about 10, 9:30, 10. All kinds of great things lined up. Bitcoin Ben and I are going to have a debate on whether or not there'll be economic collapse, which will be really fun. And he's on vacation right now, so we can't iron out the details. But that is in the works. And, of course, the band will be playing the Crypto Knights. we don't have a name. We're thinking the Crypto Knights. But, yeah, Vic Allgaier and Jason at 4. It's going to be a blast. All-day event, so, yeah, if you want to go, send me an email, bix@roadtoruta.com, and I'll send you the info. Costs 1 Litecoin to go. All right, let's talk about the insanity in the markets right now. Insanity continues. The repo was huge, one of the biggest, 80 billion. 80 billion, count it, 80 billion today. But that's not the total because there's still some rolling over. The total has jumped back over 200 billion. So it's 202 billion right now that the banks needed to bail themselves out today. And that is a very big number, but I think it's going to over 300 by the end of the week. Why do I say that? Everybody's saying, yeah, QE is going to start in November. No, it's starting tomorrow. Keep an eye on this. U.S. Treasury security operations. This is the flat-out purchases. This isn't loans. This is when they buy Treasury securities from the banks. The banks can't lend them to each other because they're all toxic because they have multiple owners, but the Fed is the sucker of last resort because they print money out of thin air. But look at, we had a jump today or yesterday in the offers versus the amount accepted. Now, it's usually oversubscribed, but this is a large oversubscription. 12 billion in offers and only 1.6 accepted. If you go, I went back to the past 6 months, and they're all looking like this. 4.9 billion offered, 400 million accepted. 4.9, 1.6 accepted. 5.8, 2.2 accept. They're all well below double digits, and all of a sudden we have a bump. And we have a bump right here. So something will come out today, probably a little more. So the number has jumped. It's almost tripled to 12.3 looking for purchases from the Fed. And it was only 1.6. I expect it to jump today over, again, in the over 10 billion range. And then a little more accepted. And then tomorrow, I believe they start the bigger purchases, the QEs. So I'll keep you informed. All that gets tacked onto the overnight bailouts. And here's something really interesting. Like I said, Jamie Dimon has the worst poker face on planet Earth. In his conference call or a discussion, he goes on to say, and the question in the article is, why didn't Jamie Dimon step in on the repo? Just ask the Fed. JP Morgan CEO cites pesky limitations for preventing the bank's help when short-term rates went high-wire. So he's saying, oh, he could have come in and helped, but you have to keep a certain amount of money in the bank. You can't go in and use it. Well, yeah, you do have to keep a certain amount of money in your bank, Jamie Dimon. You should be keeping a lot more, the fractional reserve, but he doesn't like the new rules. What he's not saying here is he's the one borrowing the money, along with others. But it is JP Morgan. I would assume, I absolutely believe this to be true. They're one of the largest buyers of these repos. Why? Because they have massive derivatives and they're all going haywire. Here's the article. If JP Morgan Chase CEO Jamie Dimon had his way, he would have happily lent money into the repo market last month to help offset a spike in short-term interest rates. If it weren't for those meddling regulators, that is. When the head of the U.S. biggest bank was asked about the current crisis in short-term funding markets during the third quarter earnings call, he wasted no time in citing a range of limitations on how JP Morgan deploys its cash at the Fed. Quote, now this is Jamie Dimon at his conference call. We have a checking account at the Fed with a certain amount of cash in it. Last year, we had more cash than we needed for regulatory requirements. He didn't say this year. So repo rates went up. We went from the checking account, which was paying IOER, into repos. Obviously makes sense. You make more money. Now, the cash in the account, which is still huge, mind you, 120 billion. Well, wait a minute. He has 120 billion cash in the account, but he has 56 trillion in derivatives. And he has massive amount on loan. It's a bank. 120 billion is nothing as far as reserves. It's 120 billion in the morning. The cash, we believe, is required under resolution recovery and liquidity stress testing. Therefore, we could not deploy it into the repo market, which we would have been happy to do. It's up to regulators to decide if they want to recalibrate the kind of liquidity they expect us to keep in that account. I think it's a lot of banks were in the same position, by the way. What he doesn't say is he was the one borrowing because they capped what he could keep. He had to have a minimum amount in that account, and he didn't have enough. He had to go out and borrow. We believe the requirement for the CLAR and resolution and recovery is that we need enough in that account so if there's extreme stress during the course of the day, it doesn't go below zero. During the course of the day? Go back to before the crisis, you go below zero all the time during the day. So the question is, how hard is that of a red line? That will be up to the regulators to decide. But right now, we have to meet those rules, and we don't want to violate what we told them we were going to do. It is too late. They have violated everything, especially in silver, what the regulators told them to do. Jamie Dimon ticking off a number of Federal Reserve regulations in just a few breaths is a sign of just how top of mind these constraints are to him. He also twice concludes that it's, quote, up to the regulators to decide if these rules are good for plumbing of the financial system, making it easy to read between the lines about his views. Absolutely. Like I said, he is the worst poker player ever. By now, analysts have cited any number of reasons for the unexpected spike in rates in the more than $2 trillion repo market in mid-September when they hit a record 10%. The Fed, which initially appeared to be asleep at the wheel, has since stepped in short-term funding markets in a big way, first with the persistent repo operations and more recently with the announcement that it would buy $60 billion of Treasury bills per month, at least into the second quarter. One such theory for the repo madness centered specifically on JP Morgan. On October 1st, article from Reuters pointing out changes to the bank's $2.7 trillion balance sheet is a key factor in last month's dislocation. Publicly filed data shows JP Morgan reduced the cash on its deposit at the Fed, from which it might have lent, by $158 billion in the year through June, a 57% decline. Although JP Morgan's move appears to have been logical responses to interest rate trends and post-crisis banking regulations, which have limited it more than other banks, the data shows its switch accounted for about a third of the drop in all banking reserves at the Fed during the period. So Jamie Dimon lied his ass off again. Quote, it was a big move, said one person who watches bank positions at the Fed, but did not want to be named. An executive at a competing bank called the shift massive. Other banks brought down their cash too, but only half the percentage on average. Now these guys are getting bailed out every day. Jamie Dimon, I guarantee you, is the largest taker of these bailouts. Them and Citi, the largest. In a blunt statement, a person familiar with the repo trading told Reuters that without the constraints on JP Morgan, the rate would have never reached 10%. That kind of assessment, combined with Dimon's musings on Tuesday, are a clear shot across the bow at bank regulators. The message is straightforward. This is what happens under your rules when the markets are good. Are you willing to see what happens if the markets turn bad? Once the initial scare had passed, guess who began offering more money in the repo market? JP Morgan, according to executives in the market who spoke to Bloomberg News. As Dimon said, it did the same thing during the last year's fourth quarter after repo rates exceeded what the Fed's offers on reserves, known as the interest rate on excess reserves, or IOE. There's no indication that the Fed will consider loosening its requirements. Like I said, they're taking the system down. Jamie Dimon and JP Morgan are the ones going belly up to the bar at the Fed. Belly up at the Fed. They are going down. And thank God for that. On other news, yes, the system can fall apart at any moment. We knew on Friday that this China deal was complete bullshit. It was for the cameras, to pump the stock market a little bit. The Democrats just put the hammer down, passing or putting up a new bill that would absolutely screw Trump, and they are loving it. A darkening outlook for phase one of the China deal. The outlook for a meaningful U.S.-China deal continues to deteriorate as the House passed a bill supporting the protesters in Hong Kong, and China reportedly backtracked on part of the deal it agreed to last week. The big picture. The House bill would require an annual review of whether Hong Kong is truly separate from Beijing, to the point it justifies the special trading status it receives under U.S. law, and would implement sanctions against officials responsible for undermining fundamental freedoms and autonomy in Hong Kong. Chinese officials, unsurprisingly, did not take this news well, accusing the U.S. of political plot to thwart China's development. Chinese Ministry of Foreign Affairs said it would take strong measures against the U.S. if the bill passed. And by passing the House, that's all it has to do is pass the House. All the Democrats are on board for this. Are you kidding? Oh, it's insane. On the agriculture front, Bloomberg reported that Chinese officials are seeking a rollback of the $50 billion in tariffs before agreeing to raise purchases of U.S. agriculture to 40 to 50 billion range. Trump said was agreed to in the so-called phase one deal. So nothing was agreed to, and we all know that. And who's Trump going to blame? Trump says the economy would crash like the Great Depression if Democratic clowns are elected. I'd say the only way the Democrat clowns could be elected is if we have a crash, like the Great Depression. If Trump stops rigging every single market on planet Earth, we would have a crash instantly. And yes, the Democrats would probably take over. It would be a very sad day. Truthfully, I don't think the Democrats would take over. I think there wouldn't be a president. And I'm leaning towards that. Our government is a joke. If we have a crash and the banks go down, everything needs to be rejiggered. No longer 35 million people work directly or indirectly for the government. 35 million people work directly or indirectly for the government. I think our founding fathers had that in mind when they were setting up our country. No. These are ridiculous bureaucrats. It's a gigantic socialist nanny state that we live in. Sad. And over in Europe, sterling whipsaws as traders react to barrage of conflicting headlines. So they said there was a Brexit deal, and then they said there wasn't a Brexit deal. Conflicting headlines this morning between British and European Union officials produced new concerns that a Brexit deal is on the verge of collapse. What do you think the derivative markets are doing behind the scenes? Derivative markets can't handle this kind of volatility. So Trump says, yeah, we have a deal on Friday, and then we don't have a deal on Tuesday. Brexit, yeah, we have a deal, now we don't have a deal. Is this all being done on purpose to destroy the system? Absolutely, 100%. 100%. That's your morning news. It's crazy out there, and I want to thank everybody. All the new members, thank you for joining the private road and getting your Veritasium token. It keeps jumping up and down over $20 and under $20. So I'm going to keep giving them out until it jumps. Let's say $25 is the cutoff. Once it hits that for the first time, it's the cutoff. Check out roadtoroot.com. Hit subscribe today, and you will see what I'm giving away. One Veri token on a paper wallet, mailed to your front door, and the coolest coin ever made on planet Earth. The Road to Ruta coin, individually numbered, double stamped with luster, cave right there in the side of the Grand Canyon, silver brick road. Oh, just a beautiful coin. It's a big square Road to Ruta. Talk to you later.